This is Teddy Keckstaff from Forex Trading Unlocked, and we are here on Monday, May 24th for a Forex market analysis for the last week of May. Before we get into that, we want to show you our disclaimer to remind you that this webinar is for illustrative and educational purposes only. If you have not done so already, please subscribe and like our Forex Trading Unlocked YouTube and Twitch channels, and also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. With that, we're going to get into our live action screen here. We have the forex-trading-unlock.com website pulled up. We've already pulled up excuse me, our workstation tab from our navigation bar. We're going to skip past the numbers. We do have a holiday week in the U.S. here coming up, so expect trading to be thin as we head into Thursday and Friday in front of the 3-day Memorial Day weekend. There is a lot to talk about as far as volatility obviously going on. We have the Euro-US dollar here butting up against new move highs once again. It's been really choppy the last few sessions as it's trying to grind higher. So the trend is your friend right now. We are using, we have no buy and sell signals, so we're going to key off of this previous high that we had just set. And also we're going to key off of this low right here. In between this area, we're expecting this market to be pretty much a range trade, and like I said, it's a holiday week. There's a lot of geopolitical things that are coming to the head. We have a somewhat neutralizing ceasefire in the Middle East, and we have to see what kind of resolutions come out of it. There's also there are some economic numbers to watch out for this week, but really more of the big ones are going to be coming out next week. I would key off of the oil numbers on Wednesday. The key markets to watch influencing currencies right now is the debt market, with the treasury bonds and 10 years looking at flirting with new move lows. We have gold that's pressuring new move highs, and we have oil that is steady to looking for an upside breakout as well. So right now, as far as the Euro-US dollar is concerned, on the daily we don't have much. On the hourly, the swing trade is definitely very positive, but it's reluctant. We haven't had the U.S. markets open yet, so we'll wait and see what happens after 8:30 Chicago time, when the New York Stock Exchange opens and the equities start to fly. Perhaps the dollar may get a little boost then, but right now the major currency against the dollar and the dollar index, the Euro-US dollar, is pointed towards pressing new move highs sometime between now and the next couple of days. Let's look at the British pound, US dollar, GBP, USD. Sorry about that noise in the background, but can't help the fact that they had to come in and do some sidewalk repair outside the office. British pound here has the market pressing against resistance as well. Look at what it did not do yet. It has not taken out this high. This is our benchmark pivot right here. If we get above 142.46, it is very likely that we are going to see the British pound US dollar not just take out this high and poke above it. We're looking to target 145, $1.45 rather, on a intermediate term basis for the pound US dollar. One of the things to key off here also is that all trading above this previous low here around $1.40 maintains the aggressive bullish posture. Higher move highs and higher move lows continue to reinforce the upside trend. Until we have a signal, we are only viewing any type of pullback as a short-term correction, profit-taking move. Otherwise, we are viewing this, we are maintaining a very bullish posture on the pound US dollar, especially as hopefully stability comes back somewhat to the Middle East. With oil prices running higher, it's going to be very hard to get a sell-off in the British pound US dollar. So right now we are looking for, especially this week, a lot of choppy trading here. As you can see, it's been a grind of a rally. I would not expect any major surges like what you've seen over this little area here or in this little stretch here in April, at least until after this week. We're heading into, once again, the Memorial Day weekend holiday in the U.S. Trading is expected to be thin and light for most of this week. And be careful, you do have a lot of big moves that can occur when volume is light, but those are vacuum moves. They typically don't have a lot of follow through. You get a lot of head fakes. So be mindful of this as you trade going on into the rest of the last week of May. So British pound, U.S. dollar, we are looking for a breakout to the upside of $1.4246, targeting $1.45 even. Should we fall down and take out this $1.40 even area, basically, we're looking for a digestive phase. I wouldn't expect any major sell-off. If anything, I would be looking for a dip to buy. Remember, we're coming off of a higher move high. Even if we were to set a higher move low, it would only have us in neutral. It would not have us on the bearish campaign. U.S. dollar Swiss continues to shrink, or sink rather, making lower move lows and lower move highs. Until oil does start to really break out to the upside, and with gold pressuring new move highs, it's really hard pressed for the dollar to maintain any type of bullish momentum. So unless we get above this area, this 90-96 area, I would say that we're going to continue to press newer move lows, making newer move lows and lower move swing highs. Right now, do not try and catch a falling knife. Should we have a sell-off in gold and a big rally in oil, then I would say that you're probably going to see maybe a nice little corrective move higher. The interest rates would also need a nice sell-off as well to help reinforce such a rally in the U.S. dollar versus the Swiss. So right now, it's a grind lower. I would look for opportunities to sell. I think range traders are going to do very well in this market over the next few days. Like today, you can see how it tries to be positive, but I mean, on Friday, it was positive on the day, but made a newer move low. Today, it's basically caught with inside the range of Friday, that's winding its coil, setting up for a volatile move where it's going to be a vacuum move. I would expect volume to be low. Be very careful to the long side. Do not try and catch a falling knife again, once again. So looking for a rally to sell. U.S. dollar, JPY. Let's go head over to the Asian markets. This one's been snaking along, and this one is caught up in a little bit of a grind. Now, why is this happening? Well, it's because we have gold that's rallying, and we have oil that's been kind of neutral to lower, but not really lower. So that's got us in a little bit of a funk with the U.S. dollar, Japanese yen. Should we continue to get a surge in oil prices again, if that resumes, then I would expect that we would have a breakout of this 109.81 area, and we would be targeting new move highs to take out this high from back in March. Anything above this high from March, I say from 111 even on up, we are targeting some major move extensions up to 113, 114 in the yen. What would precipitate a rally such as this would be a sell-off in gold and a big turnaround in oil should we get back above that $66 to $68 a barrel. We're heading in front of a holiday weekend in the U.S. Demand for oil and stuff like that and gas, obviously there's a lag, but usually because of the holidays, pricing starts to go up again. So it wouldn't be outside of the realm of possibility to see the yen maintain this higher move high, higher move low posture and make a run for 109.81 and then make another run for this previous high over here. Even though this is snaking along and it looks like it's kind of weak, you have to remember that the correction ended here on April 23rd. We're going to put this little support line in here. By attrition, it's drifting through this little rising support level, but it's in this contained from this low right here, which is a higher move low. So these balance points keep the short-term trend positive. Range traders are probably going to have a lot of fun with this one this week. Once again, should we get a rally in oil and any type of sell-off in gold, be mindful because we will probably be bucking up against 109.81 very, very quickly. Now, should we have a very big sell-off in oil, then we might flirt with a test of 108.35 here, in which case we're looking for a correction down to 107. 106.5 would be the extreme of any downside move. Now let's look at the Australian dollar, US dollar. This one's a big chop zone. We've been calling this one right for a while now. This is a range trader's delight. Be careful. The trend is definitely bullish, but it is a grind. This thing is not trying to run away to the upside, but it certainly isn't going down either. I would be very cautious As you can see, every day, this is the kind of day where it's one-sided. Either one day the shorts are good, then another day the longs are good. Once again, it's a range trader's delight. There is no full momentum or really good trend. It is making higher move highs and higher move lows on a very micro basis, which is just supporting the neutral trend. So we're not looking for anything here until we get a breakout above 78.92 and until we get a downside breakout here below 76.74. New Zealand dollar, US dollar is starting to look a lot like the same. We're not seeing very much action here. This is a very this market is winding its coil as well. We have to wait for a move. Right now, we don't really expect any major surge in momentum to the upside or the downside. Is this forming a minor head and shoulders pattern? Well, it could be. We'll see. By attrition, we're already ready to take out this neckline, but we'll see. We'll put this neckline involved here. By attrition, we could pass below this upper sloping support line, this neckline, but we'll see. If we can take out this and then take out this key low of 71.16, that would confirm a short-term potential correction with the ability to get down to the 70 half, even 70 even level. But that is only should we be able to take out those support levels. Most likely, as long as oil stays high, flat to higher, we're going to make a run back up towards the 73.05 area, but we are not looking for any extended follow-through unless we have some major trend moves where oil really was to explode, say to $75 a barrel, and also should the interest rates get a break and start to rally. We're not seeing that one currently even remotely on the table, with Janet Yellen talking about raising interest rates to curb inflation of all the ridiculous things of all you could think about. Here's another one that's a grind lower. Be careful with the US dollar Canada. We are not expecting any major type of action here except for more downside buffering of support. If you want to sell into rallies here, that's your choice. I think that's probably a good forecast because we really have no reason to change this trend. This market has been a bear for over a year, and it doesn't have any signs of lightening up between the geopolitical tensions between the U.S. and Canada, higher oil prices, and a bunch of other issues. There is just no reason to see a bounce. Even if you see a rally in the dollar, odds are will not see one in the U.S. dollar Canada, except for a corrective move like where you came off of lower swing lows to make a lower swing high before the next erosion back down of support. We're looking for more sideways action as we head into the rest of this week. Not a lot going on with this week. Be careful, guys. It's a holiday week. From 30-plus years of experience, I'm telling you, if we have any big moves, they're going to be vacuum moves on low volume. Those are always skittish, hard to get in. If you're not in, you get crushed. Stops get blown through. So I would say that your risk only is heightened and your potential reward is diminished until after this week. And as we head into the last month of the second quarter. So we'll see about that. Right now, like I said, we do not have any really bounce points here. Do not try and force a market. Wait for a market to set up. You cannot fight this grind. Do not fight the machines. All you're going to do is chop yourself up. So wait for key moments to get in. Stay disciplined. Stick to your trading plan. Remember, do not trade just to trade, because all you're going to do is end up donating to the market and to the rest of the world. So let's go back to the Euro US dollar real quick. Once again, this thing is just floating, waiting for the U.S. Open. It is flirting with an upside breakout. But as you can see, as it made new highs here, it barely ticked higher, and then all of a sudden, boom, fell back on support. We're not expecting any major ranges today. We're not expecting any major trends. Anything can happen, obviously, but please use caution. Like I said, once again, we're warning of the holiday market slowdown, at least until a week from now. We'll see what happens when the U.S. markets open. see how it reacts to what's going on in the Middle East. Who knows? Maybe we can get some good swings, and we'll have something to report back to you later. So for those of you that have been hanging in here with us for this webinar, I want to thank you once again, and also remind you to subscribe and like our YouTube channel and Twitch channel, and check us out at forex-trading-unlocked.com every day for your Forex needs and information. And also check out the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, written by yours truly, Teddy Keckstedt. And once again, I want to thank you once again for spending your time with us at Forex Trading Unlocked. And after the markets open this evening, we'll have a nice little update from today to see what kind of market action we have moving into Tuesday's trade. So you have a good day. Good luck with all your trading. Don't forget to stick to your plan, use your stops, and leave questions on the comment section in our YouTube video if you want us to check out any markets we haven't covered, or any other